younger generations, so obviously millennials, Gen Z, but even Gen X to some extent, are in a much weaker spot in terms of their spending growth. I mean, why is that? Well, I guess for the young, you have seen some labour market pressures in things like graduate unemployment rising above overall US unemployment. As you graduate at the moment, it's a little bit tougher to get a position. For Gen X, increasingly they're in this position where they're potentially going towards retirement, they've got to save more, they might have older relatives, they might still have the kids at home. So they've got quite a lot of pressures on them, I think.
And this has impacted, of course, as well, housing equity, has it not?
Yeah, I mean, there's a lot of equity in homes. It's not increasing that much because obviously the housing market is pretty stagnant. So consumers could, in principle, access that equity that's been built up over time through things like home equity lines of credit, HELOCs. What we look at in our data, which is the HELOC utilisation rate, so people who've got this facility set up, how much they're tapping it, it is picking up, but it's picking up relatively gradually. So I think that's not a major driver for the overall consumer story, but for some, as the Fed cuts and those rates become more desirable, it's going to help.
So, David, we're in a data vacuum right now in terms of the official government numbers that should be coming out. We should be heading into CPI Tuesday next week. Instead, we're talking about University of Michigan Consumer Sentiment Survey Friday. How much do you see some sort of resilience that we should be observing in the data, right? What would we be getting if we were getting that official government data?
Well, I think... I mean, we do this every month, rain or shine, so it's has increased focus right now, of course, because of the dearth of official data. I mean, I think what you'd see in things like the retail sales print is retail might be a little bit soft in September, but the overall consumer picture is pretty healthy. In CPI, I mean, we don't have too much to say on that in our report, but we do notice that when you look at transactions versus dollars spent in some categories of retail that are quite tariff sensitive, if you like, there is a divergence. So there is some tariff pressure probably coming through in the bottom line, but it's gradual and it's relatively modest.
So essentially not necessarily contradicting anything that we're seeing in the corporate earnings or any of the other stories that speak to this consumer resilience for the most part. David Tinsley of Bank of America Institute, thank you so much for being with us. Right now, let's get you an update on stories elsewhere this morning. Here are your Bloomberg briefs with Yahaira Anand. Yahaira.
Hi, Lisa. China will begin charging special fees on American ships docking at its ports starting on Tuesday. The move comes in retaliation to a U.S. plan that charges port fees on Chinese ships. It marks a significant escalation in the months-long trade dispute and comes ahead of high-stakes meetings between the country's leaders later this month. Meanwhile, Amazon is rolling out an updated version of its main artificial intelligence tool for business. It says Quick Suite is a chatbot and set of AI agents that can analyze sales data, produce reports, or summarize web content. It's the company's latest effort to grab a slice of the market for software designed to automate and speed up office work. And Treasury Secretary Scott Bessent has narrowed down the list of candidates to replace Fed Chair Jay Powell from 11 to just 5. CNBC is reporting the following names made the list: Michelle Bowman, Chris Waller, Kevin Hassett, Kevin Warsh, and Rick Reeder. Trump's pick could be nominated to the Fed, though not necessarily as chair, by January. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. And Chris Waller, who is speaking in a television interview, said that there is nothing political that he experienced in an interview for Fed chair, and that the Fed can use alternative data during the government shutdown. Are they calling ADP?
ADP, they're looking at open table bookings maybe. I'm sure they're looking at everything they can get their hands on, corporate America and the likes. Maybe it hasn't been political in these interviews. I will say, though, based on what I have heard about how this has gone when you walk into the Oval with the president, the number one question is, will you cut interest rates?
And that speaks to what he said, which is that the U.S. labor market is not doing great. Up next, standoff on Capitol Hill.
We will evaluate in good faith any bipartisan proposal that is sent over to us from the Senate if it decisively addresses the Republican health care crisis.
Arkansas Congressman French Hill joins us next. This is Bloomberg Surveillance.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are gonna kill everybody. So we gotta figure this out. And we're not gonna do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Building on what already has been a record rally, futures turning up as the session grows older, with bond markets still also rallying. What you are seeing is about a tenth of a percent increase on S&P futures. The dollar giving back a little bit after a pretty strong week, a reversal of what we had seen for the earlier part of this year, and a rally into bond markets. 10-year yields now lower by 4 basis points, 4.10. Just amazing to see how stable it has been over there, especially given the fact that the government has been closed for 10 days. And now we're looking at this data desert that leaves people spinning their wheels. Under surveillance this morning, standoff on Capitol Hill.
We will evaluate in good faith any bipartisan proposal that is sent over to us from the Senate. If it decisively addresses the Republican health care crisis, it's got to be meaningful. It's got to actually improve the lives of the American people. But unlike Republicans, we are actually willing to sit down and evaluate in good faith anything that could advance the ball here.
Here's the latest. The partisan stalemate is dragging on in Washington, D.C., with President Trump threatening cuts to Democratic programs. Some federal workers are preparing for missed paychecks today as the shutdown continues for a 10th day. Arkansas Congressman French Hill joins us now. Congressman, thank you so much for being with us. Is there any progress being made? Is there a good faith effort to be getting in the room and talking about some of the details?
Well, good morning. It's nice to be with you. I think senators are certainly having conversations about what they'd be willing to do in the appropriations process after the government reopens. This is the issue. The House passed a clean, bipartisan, continuing resolution to have all of government open. And just yesterday, Chuck Schumer put a sign up saying, "We're getting stronger every day." Well, you know who's not getting stronger? People dependent on the flood insurance program who are concerned about storms or floods, people who are working in the military who know next week they get their last paycheck, people who are dependent on grant programs from the federal government to keep state child care programs open. That's who's not getting stronger every day. And so I would just simply say all the Senate has to do is pass the continuing resolution and keep the appropriations process going. So the answer to your question is yes, senators are having conversations about what they want to do in fiscal 26 spending, including on health care.
Chairman Hill, you just said the active duty service members, the military members, will get their last paycheck next week. Is it your understanding they will get paid next week? Because I think there's still been a question mark about that.
Well, I think that's the last paycheck that I'm aware of is the 15th, and maybe it's not. But either way, This is why I declined my pay during this whole period as I have in previous shutdowns. I don't think members of Congress, particularly in the Senate, should be paid while federal workers are furloughed, and some federal workers may well lose their job, when the simplest thing to do, Anne Marie, is to get this government back open. We were in the middle of discussing all of the spending for fiscal 26. The Senate had passed 3 bills across the Senate floor. We had passed 4 bills across the House floor. And Susan Collins and Tom Cole have that process underway. And Schumer, I think, for internal Democratic political purposes, chose to pick a fight with Trump and try to make a name for himself once again. So the Schumer shutdown starts in his office.
Meanwhile, we do see the executive branch continuing along on a number of foreign policy issues, including Argentina. I'd love to get your thoughts on this $20 billion swap line. If they are using the ESF, isn't that taxpayer dollars going to Buenos Aires?
Over many, many years since the 1930s, the U.S. Treasury has used the Exchange Stabilization Fund when they think it's in American interest for geopolitical reasons, for global international finance stability reasons, by both political parties. Treasury Secretary Bessent's first trip as Treasury Secretary was to meet the leadership at the Malay government in Buenos Aires. I visited Argentina in August to assess the IMF program, assess their progress, for the first time of trying to return Argentina back to a market economy that people can be benefited from by low inflation, lifting kids out of poverty, created a private sector, dropping currency controls. So I think the Malay government is on the right track, and I think Secretary Bessent is trying to carefully and prudently see how they can encourage that success. If they're successful, they will rival the stories in Taiwan or Singapore or the Asian tigers, and they will reverse the curse of 150 years of mismanagement in finance in Buenos Aires.
But Chair Hill, I was with the Treasury Secretary when he went to Argentina in April, his first international trip. This is because of the midterm elections coming up, not some geopolitical issue.
I disagree completely with you. I understand that President Milei is having national elections in Buenos Aires on October 26th. That's true, and it's important that he keep the momentum going because they need legislative support for the reforms that they've made. But just in the first few months of his leadership, he's made substantial macroeconomic reforms that have improved the outcome, and individual citizens have been improved. So it's more than that. Argentina is an important strategic partner to the United States in the Southern Hemisphere for national security purposes, for shipping purposes, for global open navigation purposes. So it's a much bigger issue than just the fact that they have domestic elections coming up.
Congressman, the market is shrugging off all of what's going on, whether it's geopolitically or whether it's the government shutdown, and they're actually looking more to measures that you've put forward, including some of the deregulation of banks, including some of what we've seen with respect to easing some of the ability for tie-ups in the financial sector. As someone who has been a part of the financial sector in the small banking area, as well as who's been really a leader in this particular space, how much more do you see this continuing? Are you encouraged by what you're seeing? What kind of consolidation are you hoping for?
Well, it's not about consolidation. It's about right-sizing the role of government supervision and tailoring bank regulations. This began under the first Trump administration when we passed a bipartisan bill that was signed into law by President Trump back in 2018. And in that effort, we wanted to tailor regulation and supervision of our financial institutions based on their complexity, not just simply based on size. And that's been a theme that we've had for my first 9 months of leading the Financial Services Committee, as we want tailoring both in capital markets and in commercial banking so that we encourage banks to be able to stay successful, have the capital they need to lend to customers, whether they're building new homes or starting new businesses. And that had gotten atrophied under the leadership by the Joe Biden Fed. It was too bureaucratic, too paper intensive, and that's the focus that we've taken.
How much are you watching what's going on in financial markets, the unprecedented run in things like Bitcoin, the mergers and acquisitions, the leveraged buyouts that are starting to come back, and starting to worry that maybe things will begin to get a little too far? Is that something that is in your purview in any way?
Well, I do think there is a return of animal spirits in the market. You see that in the equity and bond market spreads. You certainly see it in the number of initial public offerings that we've had, the largest in probably about 5 years. And so there are elements of that, and you've seen a return to some merger and acquisition activity in some industries. All of that is true. It's not something that I worry about instinctively that it's happening, but can it be overdone? Certainly, and that's the nature of markets. We want a regulatory and supervisory system, both at the Securities and Exchange Commission and in the bank supervisors, that makes sense, that's focused on material financial risk, focused on information that investors need, focus our CEOs and boards of directors at banks on material safety and soundness issues, and not be distracted by, tertiary topics like, is making this loan going to have an impact on climate risk?
Arkansas Congressman French Hill, thank you so much for being with us this morning, and good luck as the negotiations do continue. Really interesting to see kind of these diverging issues, the idea of markets that see animal spirits at the same time that you see a real kind of conflagration of desires down in Washington, D.C.
Oh, yeah, the divergence is on full display. And also what we see is going on in the equity market is fueled by AI demand. At some point, that is going to become incredibly difficult politically. Electricity demand, the price is already skyrocketing. We're seeing in places around Texas where some people are actually having to line up and ask for federal help to pay their electricity bills. And not only that, all of these graduates coming out of school not having the menu of entry-level jobs because so many firms are starting to look at potentially using artificial intelligence.
Retraining programs and energy support is going to be the really key two issues going forward that maybe we'll be hearing about in terms of Washington, D.C. talking points. In the meantime, what we are seeing in markets is a bit of a lift to end the week after what we have seen, which is near record highs, led by the bond market, which does continue to rally. Coming up next hour, Paul Christopher of Wells Fargo, Sheila Kayalu of Jefferies, Alejandro Grindal of Ned Davis Research, and Charlie McElligott of Nomura, as we do look to the potential for more of a data desert. University of Michigan Sentiment Survey. John is saying, I'm so glad I'm not there because you keep focusing on that. This is Bloomberg Surveillance.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
The American capital markets is the envy of the world.
The equity market is doing really, really well, despite the economy not being particularly healthy.
People like myself, I think, underestimated that role of AI, and I think it helps explain the resilience of the U.S. economy.
Even if the AI narrative continues, it might challenge the fact that we look around and say everything is extraordinarily expensive.
As difficult as it is, and it is difficult to invest in these valuations, we think that you need to stay invested.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. John stayed home today since we're going to focus on the University of Michigan Sentiment Survey. After all, what else is there to focus on, given that the government and all its data releases are staying closed and disrupted for a 10th straight day? We can go over what we might be getting if it reopens, which it probably won't. We would be getting that University of Michigan Sentiment Survey at 10 a.m. Eastern today, as well as a number of Fed speakers. Over into next week, we would get Wednesday CPI, we would get retail sales on Thursday, and we'd also get PPI, initial jobless claims. So much to chew over. Instead, Anne-Marie, we're looking down the barrel of just more emptiness.
We'd also get the jobs report, which we still don't have. That is done, that someone just basically needs to press the button and release. The issue right now, of course, is we're in the middle of a government shutdown. You just heard from Chair French Hill of the Financial Services Committee. Does there seem like any urgency based on the politicians we spoke to this week that they are going to reopen anytime soon? The Senate has left. It's a long weekend for them. So we're going to pick this story up on Tuesday, which means likely no data next week. But what the White House is doing is deeming some individuals essential, so at least they can make sure the collection of data is ongoing, so that by the end of the month, if the government does reopen, we do get CPI report and the others.
Well, if we want a CPI report, if we want any kind of data, we've been looking at corporate earnings, Delta, we mentioned, really demonstrating a positive read on the consumer, and Levi's indicating they're able to pass pricing along. Right now, what you're seeing in markets is a little bit of a lift as the session grows older, because ultimately people can look around, hate the valuations, as we just heard Cameron Dawson talking about, but ultimately having faith in this AI story, up about 0.1% on the S&P and NASDAQ. Russell 2000 futures up about 0.33%. If you take a look, the rally is into the bond space as well. These two asset classes have been intimately connected for quite a while now. 30-year yields lower by 4 basis points after an auction yesterday signaled that, yes, there was plenty of investor demand, even if there was a concession. 4.68% after flirting with that 5% level not so long ago. Meanwhile, gold reprising its rally after yesterday's brief hiccup, after seeing a 50%, more than 50% gain, continuing to turn upward in the market. Coming up this hour, Paul Christopher of Wells Fargo, as stocks are stalling near record highs. Sheila Kahyaoglu of Jefferies as airlines face the impact from the government shutdown, perhaps. And Alejandro Grindal of Ned Davis Research as we look ahead to University of Michigan Sentiment Survey, because what else do we have to look for? We begin this hour of futures struggling for direction with stocks hovering around those record high levels. Paul Christopher of Wells Fargo writing this: Based on our expectations for accelerating earnings, we believe the next 12 to 15 months will favor U.S. equities. Paul joins us now. Paul, let's start there. The idea that people don't like buying into valuations like this. They don't like buying into consensus. They don't like doing it in a vacuum that is just because of government dysfunction, and yet it seems like that's the only place to go. Can you explain how that is somewhat of a difficult trade, yet an obvious one to many people, including yourself?
Yeah, I mean, surely it is uncomfortable for all the reasons that you mentioned, but you have to sort of focus here on what I'd call the big rocks. The big rocks are that artificial intelligence is a trend. It has some momentum behind it. It's investable, and we need to take advantage of it. Now, there's smart ways to do that and not smart ways to do that, and we're going to try to stick with the smart ways, and I'm happy to talk about those.
Okay, so let's talk about them. The smart ways to do it. Is it investing in the hyperscalers, or is it investing in energy companies that are going to have to fuel this over the longer term?
The answer is yes. But look, you've got hyperscalers in comm services, communication services, and in information technology. All right, so you've got two sectors there. Do you want to buy them both, or do you just want to buy one right now? Buy the one that looks the least overpriced, and then let's sit there for a while. And then at the same time, let's try to diversify that AI exposure by going with what I would call adjunct trends, like the data centers. You've got some of these 2- and 3-ton computers right now around the country sitting under tents. So they're going to have to build places for those computers to live, and they're going to have to build out the energy infrastructure, not just to power them, but to cool them. Computers often have cooling below the floor. So utilities and industrials look like two sectors to us that are not as overpriced as, in fact, even attractively priced compared to information technology and comm services. And then a third way to diversify, or let's call it a second way to diversify, is to look for trends that aren't necessarily directly related to AI, but that play another big rock in the economy, and that's the fact that we think that the Fed we believe is going to cut 2 more times this year and another 2 more times next year. That's going to take the short end of the yield curve lower, and with long rates, we think, hovering near where they are right now, that's a pretty good looking environment for down, so their costs fall. At the same time, longer rates stay high, and that's what they're going to earn on their lending. So we can play different trends here in different ways that aren't as overpriced as the overall market or the individual hyperscalers, the Mag 7. So I think that's the way to go here. You want to try to be as effective with your capital as possible. And look, there are going to be pullbacks. So we're going to get to earnings season. There are going to be some disappointments, and those firms will be punished. Those could be buying opportunities. We'll have to see what transpires.
Well, I'm glad you brought up the energy demand that it's going to be for this entire AI boom. Electricity demand, do you think that could end up slowing this momentum because it might not keep pace with what these hyperscalers are trying to do?
Yeah, it's a good point. I mean, look, there are always going to be constraints when you're going through a growing trend, a growing pains trend like this one. This is a very disruptive economic trend. We saw the same thing if you go back to the 90s, right? There were shortages of things. If you go back to the 40s and the 50s and the 60s, we were developing automobile, ship, and air transport, and there were constraints there. We eventually broke through those constraints, and for investors, those constraints really represent opportunities, right? So as long as you see electricity production and transmission being constrained, that means there's opportunities in utilities. There's opportunities in midstream energy. There's now opportunities in natural gas. For a long-term investor, those constraints have to be worked through, and we believe they will.
Well, I want to know what you think are basically what you're doing in absence of U.S. economic data. Christian Nolting from Deutsche Bank earlier in the program was talking about how actually it's been easier without having the U.S. economic data. What have you been relying on?
Yeah, it is easier in a sense. You don't have reports coming out every day. But look, well, let's go back to the idea of the big rocks. For a long-term investor, what matters right here, right now, is that the economy is still growing. I don't think anybody doubts that. And that inflation is still moderate. I don't think anybody doubts that, really. And that combination, along with a labor market that's continuing to soften but is not generating a lot of new unemployment, that also tells us the Fed is likely to cut, the economy is likely to grow. We think earnings come up to $300 per share next year on the S&P 500. Those are the big rocks that investors really need to know about. The government shutdown, that's noise, it's distraction. Let's look through it.
Yeah, at this point, though, you have to wonder whether the strength that we're seeing in corporate earnings pairs with this idea of a Fed easing. We were talking earlier with Kata Kaminsky of Alpha Simplex, and she said it is confusing to her that we're not seeing some sort of sell-off in long-term bonds as a result of the Fed presumably cutting 2 more times this year in the face of real strength in the U.S. economy. How do you manage that risk, considering that we really haven't seen much of anything in the bond space in terms of volatility?
Well, that is one risk on the long end of the yield curve, the maturity spectrum, and we would agree that that's a risk. We would see other risks as well. Potentially, the tariff revenue will not generate as many dollars as Congress thinks, and so you could end up with wider deficits going forward. So there is risk, we think, on the long end of the maturity spectrum, and that's why we've been underweight there for some time, for some months. We're also underweight on the short end, expecting the Fed to cut. So that really leaves us with a bullet strategy where what we really like is that intermediate portion of the maturity spectrum, the yield curve, that 3 to 7 year range, investment grade munis and corporates. That's where we would target. Look, you're going to get a yield in that 3 to 7 year range that's not far off of what it is in the 10 year. But you're going to get a lot less duration risk, a lot less risk from fluctuating long-term yield. So whatever the reasons are, yeah, we would agree that we want to be underweight long-term debt at this point.
Are bonds still the diversifier that they have been traditionally?
Yes, over time they have been, and I mean we've done the work behind this to show that whether it's short-term or long-term, in terms of the number of years you look at, bonds are consistently the best diversifier for equities, on a regular and ongoing basis. At the moment, there's lots of trends that are churning around fixed income. So there's some buying in the fixed income space, pushing yields down a little bit. That's also tending to push more money into stocks. But that's just part of the normal give and take between those two markets. We would want people to hold both bonds and stocks because we don't want to try to predict when one is going to peak and the other one's going to trough.
Well, Christopher of Wells Fargo Institute, thank you so much for being with us. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. The U.S. has launched a bailout for Argentina, offering $20 billion in financing and carrying out a rare intervention to prop up the peso. Treasury Secretary Scott Bessent announced the currency swap and government purchases in a social media post. Trump's support for Argentine President Javier Milei comes ahead of this month's midterm elections in Argentina. Meanwhile, the Bureau of Labor Statistics has recalled staff to prepare the September CPI report because it is necessary to calculate the size of next year's Social Security checks. The agency was directed by the White House Office of Management and Budget to bring back employees to assemble the report in time for publication by the end of the month. And it was a stunning start to NFL Week 6 as the New York Giants pulled off a major upset on Thursday Night Football, defeating the defending Super Bowl champion Philadelphia Eagles 34-17. The Giants' rookie duo of Jackson Dart and Cam Scatibo led the way for Big Blue as Dart accounted for 2 touchdowns, while Scatibo powered his way to 3 rushing scores to secure the victory. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahaira. Up next, the morning calls, plus Sheila Kayalu of Jefferies as airlines get set to face the impact from the government shutdown. Have you booked flights recently? Are you concerned about this?
About flying domestically? Yes. Internationally? No.
Well, that's next. We'll get her view. This is Bloomberg Surveillance.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Senators are certainly having conversations about what they'd be willing to do. All the Senate has to do is pass the continuing resolution and keep the appropriations process going. Schumer, I think, for internal Democratic political purposes, chose to pick a fight with Trump.
That was Arkansas Congressman French Hill. As we reach day 10 of the government shutdown, both sides seem to be pretty dug in at this point. Right now, what you are seeing in markets is a rally that seems to be increasingly dug in as the session grows older. Futures now up almost 0.2%. Meanwhile, the dollar fading just a touch after a strengthening trend, counter to what we've seen for most of this year. And that rally building in the bond space is coming after Chris Waller said that he would be open to a quarter rate basis point rate cut at the next few meetings, and talked about a labor market that really is, as he sees it, under pressure. Time now for the morning calls. First up, RBC raising its price target on Tesla to $500, noting potential market share growth in the humanoid robot business. Those shares up about 0.33%. Next up, Evercore ISI raising its price target on Oracle to $350, expecting it to raise its revenue forecast. Oracle reprising some of the gains, up about 2.2% after a number of skeptical notes about the circular financing that we keep talking about. And finally, Bernstein raising its price target on Delta to $74. That's up from $59.80 right now. It's citing its premium demand in domestic travel. Those shares up 0.4% after a huge rally yesterday on the heels of an earnings report that projected real strength across the cabin. Sticking with air travel, flight delays rippling across the country as the government shutdown heads into its 10th day. Bloomberg's Tyler Kendall joins us now. Tyler, is there any sign that people are going to come back to Washington, D.C., or have they all left town for their long weekend?
Lisa, at this point, no one's coming back. According to the Senate, they adjourned last night. They're going to be back here on Tuesday. But no doubt this strain at airports nationwide is going to continue to ramp up the pressure on Congress as the government shutdown really does drag on, because we're seeing these flight disruptions across the nation due in part to this shortage of air traffic controllers who are being forced to work without pay, miss their paychecks amid this threat from the administration that they could actually lose their jobs permanently if they don't show up from work. Now, I think it's worth mentioning that during the last government shutdown in 2019, we heard from airport employees who said they had to pick up second jobs because they weren't getting paychecks, or they had to stay at home because they couldn't spend on childcare. And partly due to this pressure from airports, we saw that contribute to the deal that ultimately helped the government reopen. But Lisa, at this point, the data is pretty stark. The U.S. Transportation Secretary Sean Duffy saying that on average, air traffic controllers contribute to about 5% of the delays that we see at airports. That number has jumped to 53% in just the last week alone. I will point out that the problems have the potential to compound here. Lisa, the U.S. Travel Association says that the U.S. travel industry is estimated to lose $1 billion in spending each week that this drags on.
Bloomberg's Tyler Kendall, thank you so much. Sheila Kahyaoglu of Jefferies joins us now. And Sheila, as somebody who might or might not be interested for personal reasons as well as otherwise, how much are we seeing these delays really trickle through the airline industry?
We're seeing some delays, but, some select airports were closed yesterday for several hours, like Burbank. But in general, the airlines are telling us this is not going to impede travel demand, and we're going to continue to see momentum in the airlines. So It's unfortunate for the consumer, not so much for the airlines and the workers who aren't getting paid.
Essentially, people have to get places regardless of how much of a pain in the neck it is to get places. So it's not necessarily going to affect revenues for now. Nonetheless, does this kind of put a hitch in some of the airlines' plans, particularly I'm thinking United, that's been trying to really fight and counter some of the reputational risks around the likes of Newark?
Delta reported yesterday, and they gave us a range for Q4 of up 2 to 4%. And I think that range puts into account how long the shutdown lasts. Last time, it was only about $1 million a day. This time, they think it's going to be less than that for the last 9 days that they've seen. So Newark is always a highlight and a poster child for air traffic delays. So we'll see how United fares. Southwest has a slightly more exposure to government employees as well. But for now, we don't think it's going to stop travel demand. I'm out all week, next week traveling. I don't think I'm canceling my plans.
So you can give us a personal update on actually if you're seeing delays. But we are seeing delays, and we're seeing staffing shortages across air traffic control towers around the United States, and we're 10 days in. What happens when we're 20, 30 potentially days into this shutdown?
Yeah, we'll see more and more delays, but unfortunately, we see 1 to 2% cancellations usually, and about 20% delays. So it'll just have people stay at the airport a bit longer, but that's all we have for now.
Do you think this is a pressure point for Washington, D.C.? Because 2019, when we saw massive delays in big airports like Orlando and New York, that day, President Trump caved, and then the government reopened. Could it come down to just, airlines and delays?
I think it's a lot more than that. I mean, if you look at the defense side of the business, Secretary Hexeth is talking about awarding the 6th-gen Navy fighter. This is during a shutdown. So I think the administration's trying to move forward, but we'll see what happens with the shutdown and how badly consumers are affected.
One thing that we've seen consistently through all the earnings reports has been, and I'm just moving to what we got from Delta yesterday, aside from the government shutdown, is that the front of the cabin has been the real money driver and the back of the cabin has been the laggard. And it sort of is a tale of two airlines, the ones that are able to cater to the business class side of things, the ones that are faring with the budget customers. Did we see a shift in tone yesterday from Ed Bastian of Delta?
I think on a number of fronts. Not only the discrepancy between main cabin and premium, that pricing Delta gap even wider, that was the first. Corporate was up 8% year over year. That was really solid. Cargo was up 16% or so year over year. Their MRO business was up 60%. All these stats were pretty positive economically, if you ask me. Some of it is market share gains on MRO and cargo, but still, those were pretty high percentages.
Well, that's where I wanted to go. Is this a read-through to the entire industry, or is what we're seeing a consolidation of market share in the likes of Delta, United, and American at the behest of some of the budget carriers?
I think both fronts. You're seeing United and Delta really outperform. They've picked the right strategy. We saw United add more routes to Europe yesterday. Europe would be the one area in Delta's report I would call out that was negative. The read-through on pricing in Atlantic revenues were down in Q3. That means there was either too much capacity or there was tariff-impacted bookings. So people that were going to book summer travel in March decided not to travel into the U.S. So that would be the one data point I would call it as weak. But going back to the airlines, it's the story of United and Delta winning, the strategies of Southwest and American and JetBlue needing to refocus their areas.
Did you see any evidence that the rest of the cabin, the people who are sandwiched into economy, are coming back, that the recovery that you're seeing in demand is also coming from people at the middle income, the lower income spheres of the population, rather than just the people at the front?
You saw that a bit. In the first half, we saw pricing for airfares down. In Q3, Delta's report was a turn positive, and they're forecasting an improvement in Q4. So we really needed to see that positive inflection in the main cabin in Q3, and we got that, and we're going to see more momentum into Q4. Some of it is because airlines are cutting capacity, so you're having less routes, and some of it is because the consumer feels more confident, and that was evident in their close-in bookings. They saw more and more cash sales.
What are you expecting from American and JetBlue based on what we've learned from Delta?
I think the Atlantic data point for American is one that we've highlighted as potentially being weak. They're the third carrier in the Atlantic. If you have too much capacity, not enough demand for multiple reasons, I think you'll see a weak report there. We're more bullish into United, but I think Delta put up a very clean print without any news, any other items to muddy the waters.
What about the budget carriers? Given the fact that Delta is saying, to Lisa's point, it's the entire airline, do you think the budget carriers are going to do well, or are those customers going straight to the big dogs?
We lean into the network carriers. I think Southwest adding routes into cities like Las Vegas isn't going to necessarily help their pricing momentum. But United opening up a route to Bari or Bilbao in Spain or Italy, I think that, ignites demand that wasn't necessarily there. That's a route that nobody flies directly from the U.S., and it could, instigate demand. Last year they did Greenland, so this year they stuck a little bit more conservative with their routes.
Sheila Kaialu of Jefferies, thank you so much for being here. Really interesting point there that Sheila made, Anne-Marie, about the international travel for Delta and this question of whether it's tariffs, whether it's other issues, the international inbound class. That's the one area of weakness that you are seeing.
And the issue with tariffs, if you were looking to potentially not take that trip, not buy that car, well, once you have certainty, you're willing to maybe buy the car. But are you going to go take the trip now that it's October and it's a little bit cold when you were maybe planning on doing a summer holiday in Europe? No. So maybe you just say, I'll go next year. You can't make up for some of that lost demand.
Meanwhile, what you are seeing in markets is something of a rally that is building on the heels of these comments from Fed Governor Chris Waller, where he did say the job market was a bigger concern than any kind of inflationary pressure, saying that payrolls was likely negative. This in an interview this morning, that's giving a real boost to what we're seeing in the bond market and then giving a boost. The Russell 2000 futures up 0.4% now, Anne-Marie, really outperforming on the heels of the rally in the bond space.
And Governor Waller has been making this case for months. It was almost as if Jay Powell at Jackson Hole, the speech you were there for, almost it was like Governor Waller wrote that speech. He's been talking about the cracks in the labor market. What really concerns him is the north of 7% unemployment for college graduates. So it's no wonder here, this is where his bias is going to the end of October, whether or not we have the U.S. government data.
Given the fact that he is a potential contender to be the next Fed chair, his voice has a lot more clout in the market, as we're seeing this morning. Coming up next, Alejandra Grindal of Ned Davis Research as more U.S. economic data gets delayed. Plus, Danny Berger with your morning movers, the data that we do get. Levi's falling after warning tariff impacts are just starting to bite. This is Bloomberg Surveillance.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Seeing a lift to the open as we get a little bit closer. Futures higher on the heels of comments by Chris Waller, Fed governor, when he said that he was looking at the labor market first and foremost and seeing a weakening. That has ignited the stock market rally, particularly futures on the Russell, up 0.4%. It is because you are seeing a deepening rally into the bond space, particularly on the longer end of the yield curve, led by that 30-year denomination down 4 basis points to 4.68%. Similar kind of move in 10-year treasuries and a 3 basis point or 2 basis point move in the 2-year yield. 1 hour away from the cash open. Here are your morning movers with Danny Berger. Danny.
Hey, Lisa, we had earnings from Levi's and they upgraded their outlook. Their profitability is looking better. Yet this is what you're seeing, a decline of nearly 7.5%. Yes, the shares have run up, but the thing investors seem to be grabbing onto is the CEO saying that tariffs are just starting to bite. So that profitability they got because they were able to raise prices and people kept buying jeans, maybe that's limited for where we go from here. Elsewhere this morning, silver stocks are having a really great day. A lot of the miners here up at least 1.4% this morning with Pan American, First Majestic Silver. That's up 3.9% with silver, the precious metal, trading around record highs. It's outperformed gold. It's that whole fear, debasement trade, what have you. And also there's some real tightness and some oddities in the London spot market that also seems to be fueling a premium in New York. Meanwhile, we're looking at Venture Global, those shares getting crushed. This is the LNG company. It in a surprise loss in arbitration with another oil major. The concern is that this sets up potential litigation actions around its LNG shipments for those that face similar issues. So those shares down 18%, Lisa.
Thank you so much, Danny. Just picking up on what Danny was talking about, silver. It just really is remarkable to see up more than 70% so far this year. And I was looking at some statistics. The metal is used in things like solar panels and wind turbines. All of that industrial use accounts for more than half of the silver use. So this isn't just jewelry. It isn't just necessarily storing in your basement. And demand is set to exceed supply for the 5th consecutive year.
Yeah, there's actually a use case for this, which is a really good point. Unlike gold, where everyone just wants to basically flood into because they're nervous about central bank buying and geopolitical risk, silver is actually higher than gold has been doing. Gold is up 50% for the year. Silver's up 70% on the year and still counting.
Yeah, well, you're still to talk about some pretty big numbers at this point. Turning to the global economy and the historic U.S. investment in Argentina, Bloomberg's Michael McKee joins us now. Mike, you did a great job putting into perspective what this is like. Can you just give us a sense of how unusual this type of $20 billion credit line really is?
Yeah, it is the swap line, not the intervention in the currency markets, that's really kind of unusual. The U.S. has intervened in currency markets before, never on such a small level as Argentina. They've bailed out the euro and they've bailed out the yen. But the swap line is kind of different because ordinarily they're between central banks, and the idea is that the central bank that needs dollars will send their currency to the Fed, and the Fed will send dollars to that country for companies that need to repay loans in dollars. and then they will send it back, and the Fed will take a little bit of an interest rate gain on that. In this case, it doesn't look like we're going to be sending dollars. At least Scott Bessent says we're not going to be sending dollars to Argentina in that sense. Maybe more along the lines of guaranteeing loans, which is kind of what they did in the Mexican peso crisis back in 1994. Some loan guarantees, and then the U.S. bought some of the Mexican paper. But we don't have any details yet. And of course, there are people who are noting that a lot of people who are in the hedge fund business and worked with Scott Bessent in the past have bought a lot of distressed Argentine debt and wonder if he's trying to help them out. He's not going to tell us, but that could be an ancillary benefit.
Mike, in the meantime, we're talking about this as we don't have really official data to talk about. We're going to be focused on the University of Michigan sentiment survey that comes out in about an hour and a half. But then we would be getting CPI, we would be getting retail sales, we would be getting PPI and unemployment claims next week. But it looks like right now we're not going to get it, right?
Well, we're not going to get it next week, but we may get CPI. The Michigan numbers are going to be important today because of the lack of other data. It's the inflation expectations number that you can see there. That's the 1 year that is going to matter to the Fed because they're trying to keep inflation expectations grounded. We did see in the New York Fed version of inflation expectations that they went up on a 1 year basis to 3.4%. They run a little bit hotter in the Michigan numbers, but if they stay where they are, and not rise, that would be some good news for the Fed. Now, as for the CPI, the Bureau of Labor Statistics said last night that they are going to bring back some employees and put together the data that they had already gathered in September of the CPI and try to get it out by the end of the month. Their goal is to have it ready because it's used in the calculation of Social Security cost of living adjustments. But if they can get it done by the 29th, when the Fed meets next, it would be a big help to Fed officials trying to figure out what's going on in the economy. The one thing they have not explained with this, though, is why they don't put out the employment report, because that's already finished. They don't have to bring anybody back to do it. They just have to push the button. So that's a question still out there for the BLS.
Yeah, Mike, great point. Michael McKee there. Thank you so much for that. And Chris Waller was saying that he thought it would likely be a negative payrolls number had we gotten it. Alejandra Grindal of Ned Davis Research joins us now. Alejandra, it's so interesting. We don't have the data coming out of official government sources. We do have the data coming out of the hyperscalers that just shows incredible investment and profitability. Is that essentially what everyone has to hinge their bets on at this point in the absence of anything else?
At least for the time being. Thank you for having me again. And I do want to point out that there's still a fair share of private sector data out there. So even though we're not getting as much of the public sector data that we've been used to getting, we'll have the PMIs, the ISM, NFIB. You mentioned University of Michigan later today, Conference Board data. And, you know, I'll be honest with you, I'm also a global economist, and I have to deal with a lot of instances where there isn't much data, certain countries, especially some emerging markets. So if you look at it in the whole realm of things, we're not necessarily flying blind. We're definitely dealing with less information, but we're not flying blind either.
Are you saying that this is a good time to look at the template for emerging markets and take out that playbook and follow that in the absence of everything else? What is it showing? If you are looking at the other data points that are available, does it confirm this idea that Chris Waller was talking about, that the labor market really is flagging? Or does it confirm this idea that the stock market seems to be rallying around, which is that everything is great?
Well, so most of the data is telling us that we're seeing slowing economic growth, but no recession. So stock market usually continues to rally as long as we don't have a recession, right? But in terms of some of that job market weakness, that's why the Fed has intervened. We have seen some job market weakness, and we actually did start seeing that in other data even before we started seeing it with the payrolls data with the establishment survey. Some of it was official data, such as the JOLT survey, but we were starting to notice some weakness in jobs through some of the survey data, such as the Conference Board's Consumer Confidence Index, some of the NFIB data, and even the ISM data.
So if we have a weakening job market, what you talk about is below trend growth in the U.S., but not a recession. So what kind of environment is this?
it's a lot of it is just an environment that's being held down by near-term uncertainty. At Ned Davis Research, we tend to focus on a lot of data, and most of the data we look at will look for, what are called like recessionary thresholds that look at a broad array of data. And for the most part, they're not really giving us an indication that recession is a near-term concern. And we have gone through periods where we've had below-trend growth and no recession.
How do you feel about inflation now, the fact that, as Lisa has brought up today, we're hearing companies talk about it like Levi's, that they are passing on these costs to consumers?
For the time being, we do. And I think last time I was on the show, I said the same thing. We do see upside risks to inflation, obviously coming from the tariff perspective, but I think also a very underappreciated source of upside inflation can come actually from a lot of the deportation policies that are seeing a decline in workers in certain services-related industries and agricultural industries. So we do expect a modest upleg in inflation. Up until now, yes, you mentioned Levi's. They have a lot of consumer goods tend to have smaller margins, so they may have to pass on the higher costs. But up until now, we have seen businesses absorb a larger share of the tariff costs. The issue is this going to be just a one-off thing, or will it continue for longer? And that's really the question up in the air, and something that the Fed needs data for to be able to gauge. We do anticipate that the Fed will reduce rates, but how much they end up going, whether they actually get to neutral, will depend on how long this tariff impact happens. And the longer we see prices accelerate, even if it's modest, if it starts impacting inflation expectations, then that ultimately could become a self-fulfilling prophecy. And that's really what we'll be watching.
Has it surprised you, Alejandra, that we haven't seen those expectations of higher inflation priced into Fed funds futures, whether it's the long end of the yield curve, or even just inflation expectations in break-even rates?
Yeah, it's a balance of risks. And so for the time being, because the market-based measures of inflation expectations remain fairly stable, we are, reasonably confident that we won't see runaway inflation, but we'll be watching it because we are seeing it within the consumer measures. Mike McKee mentioned it earlier. We'll probably see a little bit with University of Michigan today. And if it moves further and further, then it might start impacting the market-based measures. But at least the fact that those have remained, fairly stable gives us some hope that the impact of tariffs will be relatively short-term.
Meanwhile, the incredible rally this year has left a lot of people nervous, and they've been trying to poke holes in it. And earlier this week, we talked a lot about the potential for an AI bubble. And then Microsoft comes out with this overnight, where they forecast data center crunch persisting into 2026. Is there just this fundamental drive that really does force any kind of bearish sentiment around the hyperscaler space or the AI rally that we've seen to just go away and hide in the corners for a little bit longer?
Well, that's the fundamental question, right? How long can that work? It's a lot of also what's been driving the economy, right? Like if you look at capital expenditures, we're seeing quite a bit in the AI space, and that's what's, keeping that element of the economy afloat. And then it's driving markets. And for those who own stocks, that's creating a positive wealth effect, and it's keeping people spending, despite the fact we're seeing some of these job concerns, especially keeping spending within the higher income levels. So that's definitely driving that story. Whether it's excessive optimism, we have a lot of measures in-house that try to measure optimism, and we're not seeing excessive measures yet. I think there's still some people sitting on the sideline because they're concerned about the impacts of the Trump administration. There could be other folks sitting on the sideline, but we could be getting closer to that point, but I don't think it's coming, at least within the next few months.
Alejandra Grindal of Ned Davis Research, thank you so much for being with us, and have a wonderful weekend. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. The 72-hour period to release the Israeli hostages has begun. Steve Witkoff, the U.S. Special Envoy to the Middle East, says the ceasefire agreement between Israel and Hamas started at noon local time. President Donald Trump is planning to travel to Israel on Sunday to be on hand for the release of the hostages. He also said he might address Israel's parliament. Meanwhile, Maria Corina Machado of Venezuela has won the Nobel Peace Prize. Machado won for her work promoting democracy and decades-long struggle against authoritarianism in Venezuela. Machado has been in hiding for more than 14 months after Nicolás Maduro declared victory in last year's election. President Trump's assistance posting on X Mobile proved they place politics over peace after the announcement. And Apple will expand the roles of some top executives as Chief Operating Officer Jeff Williams prepares to leave the company. Services Chief Eddie Q will take over Apple's health and fitness teams, and Craig Federighi will oversee the Apple Watch operating system. The moves come ahead of the planned launch of a new subscription service dubbed Health Plus. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Have a wonderful weekend, and thank you for this morning. I can't wait until we don't have doctors anymore. We just have wristwatches that tell you, please stop eating that. That's what I imagine.
Or rings.
Or rings.
That tell you that you're not sleeping enough.
Or little humanoid robots that tell you to go get more exercise. Up next, setting you up for the day ahead, plus Charlie McElligott of Nomura saying that investors are not shying away from the AI trade. I know you all were wondering that. Looking today, again, NASDAQ futures up ahead of the open. This is Bloomberg Surveillance.
체결되었습니다. 확인 바랍니다.
We have two crises, two essential crises, and for both it's now or never, democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to
주문
deal with
청산이
the climate,
완료되었습니다.
and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
You try to get everything you get from the data perspective. So for example, ADP, when you don't get the non-farm payrolls, you really watch closer. But of course, you need to take into account what kind of indicators are there. And I think, for a certain period of time, you probably can fly a bit blind from the data perspective.
That was Christian Nolting of Deutsche Bank, who said it was easier without all of those data points that you have to analyze, considering the fact that things are still tugging along. Counting down to the opening bell, here's a trading diary into next week, 10 a.m. Eastern, University of Michigan Sentiment Survey. Also today, rounding out the week with Fed speak from President Trump, who's making an announcement. Next week, more key economic data that we're probably not going to be getting. On Wednesday, we've got CPI data, or we don't have it. On Thursday, PPI and retail sales are supposed to come out with that additional round of jobless claims that we did not get this week. Turning back to markets, Charlie McElligott of Nomura writing, in spite of such euphoria in asset prices leading to what many would expect as caution, the client refrain for many now is you cannot own enough AI trade mega cap tech. Charlie joins us now. Charlie, thank you so much for being with us. I have to say, it seems like in the absence of data, the buy AI trade only gets stronger because ultimately the data that we do get just continues to support it. Is there the skepticism in your clients that we hear from investment analysts sometimes on this show?
No, there really isn't. I mean, look, there's dual narratives right now. The AI, the AI phenomenon has been, massive with regards to the CapEx and now this very kind of self-referential, self-reinforcing financing dynamic. And that's been part of the high water raising all boats with regards to markets and easier financial conditions. But macro-wise as well, there's been this kind of fiat currency debasement trade, right, where governments are running fiscal hot, heavy deficit trajectory, the spending in conjunction now with central bank easing. And when you have all that working together, it's creating more of this kind of pro-cyclicality, both in markets, market forces, economic forces. So people are more concerned right now, just having my big macro quarterly dinner this week, more concerned about missing the right tail than they are about downside, even with markets at highs.
It sort of raises this question, especially when you talk about the debasement trade and this monetary and fiscal bazooka that it seems to be firing on both cylinders right now. A question of whether the AI trade is viewed as almost safer than some of the more traditional ones. And I put it in safe in quotes, but the idea of that being more reliable than, say, government debt or credit in certain spheres.
Yeah, for sure. I mean, look, these companies are, and the big difference between this time and, kind of the tech bubble, right, is that this is not, a dream per se, right? These companies are generating massive profits and cash flows. And so far, that's been most of the financing of this pursuit of the chips and the centers and everything, with regards to the kind of the Delta One around that, the halo of the energy providers and the utilities and all that stuff. The thing is that these companies are super high quality, obviously, very highly rated debt as well, at a time where bonds haven't worked, right? And you want to speak to about this kind of speculative environment, the speculative backdrop, right? It's not just risky assets. It's not just the AI right tail. It's short volatility strategies, right? Short volatility strategies have kind of become this new tool for income generation in a world where bonds haven't worked for 5 years because we've been running, above trend. So they're quality, they're big cash flow generators. They have this story to them. They keep going up. They're liquid. There's a lot of stuff going for it right now. And honestly, right now, imminently, it's going to take some sort of a margin shock, that currently is not out there, that the market has not really felt, to sway them from this trade. And it keeps, again, working with these market forces, particularly, the stuff that I care about, options and leveraged ETFs. It just feeds us higher.
Does it give any of these investors pause, though, that all these deals are rather circular?
They are, but I think, again, the difference being that there's real money that's being made right now. Real money, real profits, real cash. The thing that I think can inflect us as we go forward here is this idea that, and you've already seen this with Oracle, right? And you've seen, the Oracle kind of, the debt ratios really change, where you're talking now about bringing debt because you're burning through so much of your cash, right? Cash has been a huge part of the buyback story for 15 years. When corporates learned with, how well rewarded you could be with buying back your own stock, that's become that was probably over the past 15 years, the largest single source of demand for equities, and it's a vol suppressor, right? You're shrinking the float, you're stabilizing bid under the market, and then when stocks are selling off, they're even more aggressive. If that cash is now being burned through in pursuit of this, CapEx euphoria, and you start now having to bring more debt to kind of fund all of these things at the same time, the risk here, and something that I'm watching closely in coming quarters, is if you see that almost perpetually higher announced buyback number across S&P 500, which is largely these AI mega cap tech companies, if that starts turning lower at the same time that the debt issuance from these companies is moving higher, because that now has to be brought in too to fulfill all of these obligations, that's something that I'm going to watch, because again, that buyback bid to stocks has been the #1 source for stocks over the past 15 years.
Jonathan's made this point a lot, though. The market is rewarding these companies for doing that, for levering up.
Well, I mean, but it's still really, really low leverage. And look, you know, this has been a talking point too this week at the macro dinner, our credit discussion. You know, people are nervous, you know, kind of on the outside looking in with regard to First Brands and Tricolor and, you know, delinquencies at Carvana, wondering if some of this clustering you're seeing in pockets of like asset-backed or super subprime space is something bigger. And it is going to be part of the story next year because tech is now the largest part of kind of IG issuance. You know, that's a big story. If this kind of keeps perpetuating where you have to bring more debt to finance these pursuits, and it's somehow also, too, at the same time, impacting the amount of stock you're buying back, it's something to watch. But again, these companies are incredibly cash flow positive, incredibly high quality because they're so profitable. So that's an inflection in the future, but that's not a now issue.
How much are people stretching outside of the hyperscaler space in order to get returns, in order to get alpha, given the fact that it's a pretty played out trend, if not complete, on the hyperscalers?
Yeah, so I mean, the fear of the right tail is you know, taking prominence, as we've spoken about. And I think the last time I was in here, I was talking about this kind of people were in the bunker. So we've moved from the bunker to the fort, fear of right tail. In this case, people now, and this tends to corroborate what you're seeing with regards to an early cycle move, right? Fed cutting into an early cycle economic reacceleration. You're now moving into really high beta, junkier stuff. So like unprofitable tech has been on a tear. Short basket's been on a tear. A lot of these things up 15, 20% in the past week and a half. So you're seeing elements of that. Obviously, you've seen crypto move to new highs, partially as a function of dollar debasement or fiat debasement, most recently the yen with regards to the elections there. You know, so you're pushing into like the wingier stuff, which is providing that extra beta. You know, it's silver, as you spoke about earlier, right? Silver is, you know, the junky high beta version of gold. You know, and it's acting that way, even with an industrial purpose, right? That's where you're getting your juice. Call skew in these things, right? Demand for out of the money stuff versus at the money, 95th to 100th percentile on all this stuff. So people are reaching because they're worried about this right tail and all this stuff because you have a career anxiety right now. It's performance anxiety. Like, it's existential. If you don't capture this, you're cooked. The trick here now is that at what point does all of that suppressed volatility, all of that exposure built off of the suppressed volatility, all of the leverage into the highest beta stuff, you know, oftentimes that tends to tip over and kind of collapse under its own weight. And that's what I'm conscientious of. So like I'm constantly looking at like where are people hedging, and it's the VIX calls, VIX upside, VIX call spread space.
Charlie McElligott, thank you so much for being here.
Good
Wonderful to have you. Let's do it again. Charlie McElligott of Nomura with the meme metals with silver. I love that. That's a fantastic way to look at it. Coming up on Monday, Peter Shear of Academy Securities, Alessio DeLongis of Invesco, Seema Shah of Principal Asset Management, and Jean Beauvais of BlackRock. Thank you for listening. Have a wonderful weekend. This was Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico.
주문 청산이 완료되었습니다.
It is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates, it complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost of the meatballs,
So I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Bersecci in Vienna, and this is Bloomberg.
Finally made it to Friday. In just 30 minutes until the start of trading, I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, China opens an antitrust investigation into Qualcomm as President Trump and President Xi jockey for leverage before they meet at the end of the month.
And on the earnings front, jeans maker Levi's raises its full-year outlook, but warns that tariffs are starting to bite.
Plus, Wall Street banks gear up for earnings season that kicks off next week. Investors are going to be watching deal-making performance after $1 trillion in deals were done during the quarter.
A lot of enthusiasm there, but where there's not enthusiasm is some corners of tech this morning, Matt, especially with Qualcomm. It's one of the ones we're watching, down 1.4% in the pre-market. As you mentioned, China investigating the company for suspected violation of the anti-monopoly law over a deal to buy Autotalks, a auto tech company. That deal was announced way back in June, and it's yet again tension between the U.S., China, American companies ahead of talks between Xi and Trump.
All right, that's a story we'll cover. Also, Levi Strauss warns that it is starting to feel the pain of tariffs. It continues to expect tariffs of 30% in China. You can see that the shares right now down 8.6%, and we're going to talk about that. I mean, really a legendary, iconic maker of jeans, although the product has changed quite a lot, Danny.
I'd assume so. They don't have the looms. They're made by machines. I should say shares are up 45% year to date, so a little bit of weakness today isn't ruining the overall rally. Let's begin, though, with China targeting Qualcomm. Bloomberg Intelligence Global Head of Tech Research Mandeep Singh joins us now around the desk. Mandeep, it does continue to feel like these companies are being thrust in the middle between disputes with the U.S. and China. Is that what's happening here or something different?
I mean, look, when we look at NVIDIA, they acquired this company, Mellanox, a few years back, and there was an investigation opened for that as well. Right now, we are in an environment where any company on the hardware side or chip side with exposure to China revenue, they are in the crosshairs of this negotiation and, the trade dialogue that's going on between U.S. and China, and it's not surprising that Qualcomm having got almost 60% revenue exposure, so clearly it's not that unexpected that they are caught up in this.
And Intel, what's the chip they have? Panther Lake or something? It's apparently super special for laptops. Intel's market cap may overtake Qualcomm today, which I find pretty amazing because last year we were talking about the possibility of Qualcomm buying Intel.
Well, look, the U.S. government, when they took the stake in Intel, it was pretty obvious that, Intel is front and center in terms of both their fab side and as a company, the
주문
government
청산이
wants them to do well.
완료되었습니다.
And with all these deals getting announced by OpenAI with NVIDIA and AMD, it makes you wonder, what would it take for one of these companies to announce a deal with Intel? NVIDIA did that with Intel, but it wasn't for the foundry.
Right,
So
that's the
need
question.
that foundry component. And
so do you expect that,
I do.
Mandeep? Do you think that Intel is going to be making chips for companies like NVIDIA?
I don't know if it will be NVIDIA, but I do expect some sort of a deal for Intel fab, simply because the government has made it very clear they want more onshore manufacturing, and Intel is the only company or the biggest company that has the fabs. You have Global Foundries and other companies as well, but Intel is front and center from that standpoint, advanced node capacity here in the US. And I expect with all the money that's going on at the data center level, we're talking 50 billion per gigawatt. Well, there is 75% of the components in that data center is chips. So where are those chips made? By TSMC outside the US. And so that's where the question will arise, why can't it be Intel in some capacity? And I would say companies that are at the front of it, OpenAI and Google and Microsoft, maybe one of those, so who knows?
All right, Mandeep Singh, great to have you here today. Mandeep covers tech for us from Bloomberg Intelligence, one part of a team that makes up the deepest and most robust tech coverage in the industry. The other part is Anurag Rana, and we're glad to have him on today's show as well. As shares of digital infrastructure company Applied Digital surged this morning, the company smashed earnings estimates with announcement that it's in advanced talks to fill its second data center campus in North Dakota. Anurag, what do we know about the data center story? How is this shaping up?
So we already heard yesterday there is a shortage of capacity for Microsoft. Bloomberg News did a very good story on it. And this is really the theme at this point. It's not as if you can spin up these data centers overnight. It takes time. So what happens is the entire supply chain, Mandeep just talked about, $50 billion for a gigawatt. Where is all that money going to? They're going into chips. They're going to creating data centers. So for a company like Applied Digital that provides, the cooling, the infrastructure and area, or you can say physical area for people to put their servers in, this is going to be a boom for them. It's already happening. You can look at Digital Realty, Equinix, and then you can look at the companies like CoreWeave or Nebius. So all of them are seeing the downstream effect of all this funding coming in. And it's no surprise that we are, in a situation like this right now.
Anurag, part of the reason we also saw Applied Digital rally, though, was because it talked about that CoreWeave had signed a lease for them. It kind of surprised me that they had been building these data centers without first securing a tenant. Matt and I also spoke to the CEO of Fermi yesterday, which is building energy resources, but again, without customers. Building first, customers later. Sure, there's a crunch now, Anurag, but is there a risk in that the build-out just goes too far and these companies don't get tenants down the road?
That is a very big risk, but I do not know whether we are 2 years away from it or 3 years. But look at it from another point of view. Look at any digital transaction right now. It has to have some element of AI in it. So when you look at a particular data center, and you can ask any company at this point, if they have X amount of workloads or 100 workloads right now, how many of them have any element of AI in it? I think that number is very low. It doesn't matter whether I'm opening my email or chat. There is more and more AI-related features out there. It could be on any other factor that you can think of. So those workloads have to transfer from a CPU-oriented workload to a GPU-oriented workload. And given the shortage of, you could say, capacity that we're hearing from Microsoft right now, I think we have a few years to go before we can say that, we are going to be in that big crunch.
All right, Anurag, thank you so much for joining us this morning. Anurag Rana of Bloomberg Intelligence, off the back of Applied Digital, up nearly 30%. Now, in other earnings news, Levi's raised its full-year outlook Shares are down, though, 9.6% in the pre-market. They warn that tariffs are starting to have an impact. Joining us with more is Bloomberg's managing editor for global business, Shelley Banjo. Shelley, it's remarkable to have a company that raises its outlook, that profitability looks good, that consumers are having and absorbing higher prices, and yet shares are down almost by 10%.
Yeah, people are wondering what is sort of why isn't it better? And so, you know, when your stock is up as much as Levi's is so far this year, they're talking glowingly on the call about how the consumers are really getting into their jeans and their offerings, and yet they only raise their outlook by a little bit. And so people are asking what gives. And I think the issue is also around profit margins. They're raising their sales. They're saying sales are going to be good, sales are going to be good. Profit, maybe not so much. Temper the expectations because of the tariff impact.
It's amazing. I mean, what a cool company to cover, right? It's got to be one of the most well-known clothing brands in the world. But the consumer has to be there, right? To your point about data centers, it's got to be the same for jeans as well. And we're at a point where maybe there's a little bit of concern about the consumer, especially considering what we heard from, for example, Chris Waller today on the labor market.
Yeah, I mean, people are still buying, especially showing up for something new. So what they have done right with Levi's is launch all sorts of new partnerships with people, Beyonce, Shabuzi, like these folks that, you know, really enter into the...
What's Shabuzi?
Matt, you have some homework to do. We're
Okay.
I'll send you a Spotify playlist later. But you know, they're entering into the marketplace where people are talking about. But that doesn't mean that they are still not going to suffer from these big tariffs that are hitting them pretty hard.
Is that like a labubu?
No, wait. To be clear, it's a person, not a thing.
Okay.
You're like,
Yeah.
what's a Shabuzi?
Okay.
It's who is
I got it.
Shabuzi.
Okay.
Yes, correct.
Shelley, thank you very much. Shelley Banjo runs company coverage for us here at Bloomberg. Quick check on what's going on in futures. Pretty little change really across the indexes, and we actually fell about 0.3% yesterday on the S&P 500 in the cash session. It does look like, you know, green arrows at least across the board here, 0.1% the gain, but not too impressive.
Yeah, Chris Waller at least helping with small caps in the bond market rally, saying that we might have a negative payrolls report had we had the data. Elsewhere, coming up, Stellantis shares, they are moving higher, more on the automaker, and some solid sales coming from them as they move higher by 1% in the pre-market. You're watching Bloomberg Open Interest.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Let's get to high interest now. Look what's making headlines around the world. Treasury Secretary Scott Bessent has reportedly narrowed the list of candidates for Federal Reserve Chair to 5 from 11, including Fed officials Mickey Bowman and Chris Waller, Director of the National Economic Council of Advisors, the National Economic Council, Kevin Hassett, and ex-Fed Governor Kevin Warsh, but notably BlackRock's Rick Rieder. Bessent plans more interviews before sending a short list to President Trump, who's expected to name a new Fed leader early next year as questions remain over the administration's commitment to central bank independence. And Venezuelan opposition leader Maria Corina Machado won the Nobel Peace Prize, praised as a woman who keeps the flame of democracy burning. The decision sidelines President Trump, who's long sought the honor and whose aides called the move political. Trump's reaction could shape his next steps abroad, including peace efforts in the Middle East and pressure on Venezuela. Stellantis shipments jumped 13% last quarter, led by a 35% surge in North America as the car maker restocked U.S. dealers with models like the Ram 1500 pickup truck. The rebound signals early traction for new CEO Antonio Filosa's turnaround push, even as unions in Europe sound alarms over production cuts. Stellantis reports full results October 30th. And we are very much looking forward to that. For a bit of a preview, although it's kind of early, Bloomberg Intelligence Global Autos and Industrials Research Analyst Steve Mann joins us now. And, you know, I'm a Mopar or no car guy, so I'm excited about this, Steve. But do they have the product? Do they actually have the Chryslers, the Dodges, and the Ram trucks to do as well as we expect on earnings?
I think a lot of consumers are thinking the way you're thinking about Stellantis and its brands in North America. They do have very, very strong brand, very reputable brand, and I think that's been the issue with Stellantis in North America, is that they've over the past few years, after the merger, when they started cost cutting, they've discontinued a lot of the popular brands. So I actually, this 13% growth globally, 30-some% growth in North America, maybe just the start. It's off of a small base, but they are bringing some of these cooler brands that resonate with the consumers back, like the Hemi V8 for the Ram trucks and the Jeep Cherokee.
Should be noted, Matt did a fist bump when you talked about
Because
the
I
V8.
have a Hemi. Because I have a 6.4-liter Hemi in my Challenger.
Okay, so it reintroduces this model that, Steve, that people like Matt like, but it's also at a moment, Matt was also talking about this, that the consumer is maybe challenged. These are big trucks that cost a good bundle of money. So what is the dichotomy there between getting that audience, having them pay for it at a time when they're weak, despite some of these iconic brands coming back?
Yeah, you're absolutely right. I think you've seen some of the leasing programs that are coming out. They've been extending it to 72 months, 84 months to make them make vehicle purchases affordable for consumers. But what's been happening over the last few years without the Hemi, without the Cherokee, is that Stellantis has been losing market share to GM and Ford. And I think in this environment, there are a lot of consumers that want those vehicles back. The orders have been strong for those new vehicles from Stellantis. So we're actually looking into possibly a fierce fight for market share between the Detroit Big Three.
How does Filosa set up this company for the future, Steve, I wonder? Because the Dodge Charger EV, which is kind of a silly product to offer a muscle car audience that really wants an internal combustion engine. It's a fantastic product, but doesn't sell, right? It's overpriced. Yes. The same problem with a lot of the Jeeps. Their prices are sometimes over $100,000 for a Grand Wagoneer. How are they going to compete when consumers do want to buy EVs, and in a world when people are tired of paying 6 figures for a pickup truck?
Yeah, I think they do really need to listen to the consumers. I think cars, some of the pickup trucks, some of the cars like the Charger, really shouldn't be offered as an EV because people buy them for the noise, for the sound, for that engine sound, right? For the exhaust sound. So Porsche, as you know, has actually dialed back their EV endeavors. So, but Stellantis is actually transitioning. Look, when they were merged into Stellantis, there was a big push to achieve cost savings, and that's what Carlos, the previous CEO, did. And I think now with the market shifting, there is more focus on let's not just rebalance that focus, not just internally, but externally. What are the customers saying? What are the dealers saying? And I think they're setting themselves up to better better sales comps in the coming quarters, like we just saw in the last quarter.
What is at the moment separating the Steves and the haves and have-nots? You have Stellantis and Volkswagen also reported stronger sales, but at the same time, BMW and Porsche lowering their outlooks in recent weeks. What's distinguishing between those that are succeeding and not in this environment?
Yeah, I think where Stellantis is at, they're at a low base, right? I think a lot of the profit that Stellantis generates actually coming from North America. Now, there is a risk. Let's not forget the risk. The European market has yet to recover. We heard from BMW just recently dialed back some of their forecasts. So, but I think Stellantis is already at a low base. We know that the European market is weak. But where the biggest opportunity for Stellantis to actually improve the bottom line is in North America, and they're doing quite a bit of things in terms of meeting customer expectations over here in this part of the world.
All right, Steve, thank you very much for that. That's Steve Mann of Bloomberg Intelligence. Now, a quick check on futures, roughly about 10 minutes before the opening bell. We are higher, barely so, after a weekday that didn't maintain momentum yesterday. Maybe we can thank Chris Waller for the gains today, who was out saying that he is focused on the payroll, on the labor market, and there could be negative payrolls. Of course, Matt, we don't actually know if it was negative payrolls because we don't have the data. We might not have data next week. We might not have CPI unless the BLS is successful in getting people back. But even so, those concerns, with us flying by, Waller sending bond yields lower and small caps rallying.
Right. I think also the idea that Waller is still on the list, that Bowman is still on the list, even though they didn't dissent with Stephen Meyer for a bigger part of the last meeting, to some extent reassures investors that Fed independence remains a distinct possibility.
Yeah, I also wonder if people are looking at Waller speaking, and it's almost like a Fed chair, shadow chair effect, where they're looking at him saying, okay, when Waller speaks, maybe I'm looking at the next person leading the FOMC speaking, and therefore I trade it.
Definitely something that people are talking about in the markets today. I've been reading Neil Dutta on this very interesting stuff from Renaissance Macro. Coming up, green shoots in other parts of the market outside of AI. Abby Yoder of JP Morgan Private Bank joins us to tell us what they are and how to capitalize. This is Bloomberg Open Interest.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
체결되었습니다. 확인 바랍니다.
Bringing you
up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Luanda, Angola, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bank of America says that investors are flocking into everything from stocks to bonds and cryptocurrencies, signaling that risk demand remains strong despite the shutdown. Equity funds drew $20 billion for the week. U.S. stocks posted a 4th week of inflows. Joining us now, Abby Yonder, U.S. equity strategist at J.P. Morgan Private Bank. And Abby, we were just talking about one of the sectors that's been participating in this rally that wasn't to start the year, which is healthcare.
Yeah.
Now, that might be policy-based, but there are potentially some risks here that you're seeing, too, with that rally.
Yeah, I mean, so we had downgraded healthcare to neutral after the election last year, and it was really about policy. Like, we were just worried about what would happen, and that doesn't necessarily read through to fundamentals. It's more on the valuation side, which we saw throughout this year, right? It was one of the worst performing sectors. The valuation was really attractive relative to its own history, relative to the market, and so there was a lot of interest in it, right? Because in a market where everything's kind of expensive, clients are looking for areas that might be more attractive. And you got a little bit of a policy lift over, a week and a half ago. And so you've seen valuations re-rate. Now the question becomes, okay, what happens from a fundamental perspective? We've got a lot of patent expiries coming up for these large cap pharma companies. Are they able to backfill those pipelines is now like the real question as it relates to fundamentals over the longer term.
That's too far into the future for this market, isn't it?
It seems like it. It seems like everyone's really focused on December, right? Let's get to the end of the year where it feels like momentum just is really there, right? Everyone was talking about September is really seasonally hard. Great September. So when does that really break down? I mean, I think almost this government shutdown without the data being, released all the time, it feels like markets kind of just have no reason except for to move up.
So it's not necessarily bad for markets right now. It's pretty good.
Yeah, but I think, absent the macro data, right, we do have earnings that are starting next week. And I think that's going to be a real, focal point, notwithstanding the fact that we aren't getting data elsewhere. Just around primarily, what's going on with AI. We've seen eye-popping numbers. I think that's the struggle, right? I think it's labeled a bubble because of the numbers, because it's just really hard to wrap our heads around. But, there's real ROI on these investments for a lot of these hyperscaler companies at this point. As long as the direction of travel is up for those ROIs, I think that's very important for the market.
Yeah, it seems like every single day we're discovering some new data center company that we didn't know about that's up 0.25%. I think it's, Applied Digital is up a bunch today. So a lot more to discuss on that front as it lists everything up. Abby, you are staying with us. That's, of course, Abby Yonder. And a quick check on where futures stand ahead of the opening bell, Matt. We are still higher, to be fair. Only 0.08% for the S&P 500 after falling yesterday. But it is the Russell 2000 that's doing better after bond yields also coming back below 4.1%.
Yeah, interesting moves. Interesting that we're holding at these very high levels. And yeah, every day we learn about a new data center company that's going to produce more electricity than the entire eastern seaboard needs. We're back with the opening bell. This is Open Interest.
Asia's not sitting around waiting for politics to dictate what's important here. It has already been a leader and is continuing to be so.
People come to me and say, well, you know, Trump's been, you know, sort of saying, well, you know, we shouldn't be focused on this, but yet the corporate world knows that it needs to support this.
Asia's role in global supply chain allows it to influence the transition in ways that many other regions cannot.
All the companies that I've been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going.
Our focus is really to understand what are the technologies that are part of our portfolio for the future and scaling those technologies so that we can meet our demand with clean energy.
Resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies will start to look at.
There is still hope to actually get back down to something of a livable world if we get our act together.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
We are moments away from the start of trading on this Friday. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at pretty little change on the indexes, on the futures here. 0.1% for the NASDAQ and the S&P. Russell 2000 futures doing a little bit better, as Danny points out, likely because Chris Waller came out and said he wants to continue to cut rates, and that's what they need. University of Phoenix ringing the opening bell after an IPO at the New York Stock Exchange. They've been trading for a couple of days and are doing quite well. You made a couple of bucks if you bought that stock, if you got the syndicate. And Jefferson Capital also been trading now for a couple of months, and they've also done fairly well. If you got it at the syndicate, you're doing even better than if you bought it on the first day of trading. They're up about 25% so far. Danny, what are the stocks that you're watching today? I'm pretty excited about one.
Yeah, okay. I hope it's Qualcomm, because that's what I have for you. Yeah, okay, perfect. We've made TV magic. Qualcomm down 1%. Matt, that's off the back of China investigating them. There's suspected violation, they say, of an anti-monopoly law over a deal to buy Autotalks. It's an auto tech company, helps cars talk to each other for safety and the like. It is the latest in a string of tit-for-tat moves with President Xi Jinping and President Trump jockeying for leverage before a key meeting in South Korea that's due to take place at the end of this month, Matt.
Yeah, I'm watching, and I think we'll have a chart of Qualcomm versus Intel, because Intel has done really well, obviously, and Qualcomm less so. And as a result, Intel is, at the open, it was worth $175 billion. Qualcomm was worth $178 billion. And those two may flip-flop in terms of market cap. So we're looking to see what happens today. On the earnings front, Levi Strauss raised its full-year outlook, but the shares have been decimated after a warning that tariffs are starting to have an impact. Of course, Levi has been an outperformer this year. I think it was up 45% year to date, but it's losing a tenth of its market cap in today's trade. A pretty harsh punishment for something that you must have known was coming.
Well, also, they actually did well. Their profitability was better. Their sales have been good, but it's run up a lot this year.
Yeah, because of Shabuzi.
Yes,
apparently.
And I think did Beyonce do a Levi's thing? I'm not sure. But
yes, but not Sydney Sweeney.
Notably not Sydney Sweeney, correct.
Still with us here on the desk is Abby Yoder, U.S. equity strategist, J.P. Morgan Private Bank. And, you know, we were talking, Abby, about some of the other sectors that you're watching closely. AI takes almost all the air out of the room. But banks start reporting next week, and it's got to be fascinating because they've done so much in M&A. We've had so many IPOs. We've had so much trading revenue, as evidenced by Jefferies. So what do you expect?
We've had so much of that in one quarter, right? Like there have been years of this being like depressed activity, right? And I think that's where it's really important. Like those are big numbers. You all have, Bloomberg has done a great job in terms of talking about, okay, $1 trillion worth of deals in the quarter, but that's after, 2.5 years of kind of nothing. So that's something that we're focused on. The banks start reporting next week. And the unique thing about them also is that they touch every part of the economy, right? So they can really get an idea of not only what's happening from a capital markets perspective, but what's happening with the consumer, right? There's been a little bit of concern given some notable bankruptcies over the past couple of weeks, like what's going on with the lower end consumer. We can get that read through banks. And so that's something that we're going to be focused on. And then also, what's their outlook for the economy? What are they thinking in terms of their net interest income outlook as you've got, the Fed lowering rates on the short end, but the longer end remaining relatively anchored, which is a net positive in terms of their net interest margin expansion.
Can I just say on that front, it's incredibly confusing because there's some areas that look really weak. You pointed out the lower end consumer, housing looks really weak. And then on the other hand, corporate profits are really strong. The stock market trading at all-time highs, retail sales have been really robust. You put all that together, do you have a clear picture of where exactly we stand?
Well, I think the market and the economy are not the same thing. They never really have been. And when you think about the S&P 500, yes, it's definitely tied to consumer spending, but it's not 70% of, what is economic growth. And right now, we're also in this very unique period where it's been essentially AI driven, right? We all know that there is a concentration, concept within the S&P 500 over the last 2 years, both from a market cap perspective, from an earnings contribution standpoint. But importantly, what we saw starting in 2Q and what we expect, in 3Q is that 493, so the rest of the market, starting to participate from a positive growth perspective, right? Like flat to negative growth on a quarterly basis for, 2+ years, given the high interest rate environment. That's changing at the margin, so you can see more cyclical parts of the market start to, do better in that scenario.
If we are in a bubble and it bursts, obviously that kills the entire index. How do you hedge against that? And are you concerned about an AI bubble?
We're not concerned about an AI bubble at the moment. I think the rhetoric, again, I think this goes back to the numbers that we were talking about. There's big numbers. It's hard to understand. It's a very complicated technology that seems to be taking off.
By the way, yesterday, Bruce Richards of Marathon told us he thinks there's a bubble in people talking about the possibility of an AI bubble.
The two can exist at the same time. Just pointing that out.
But wouldn't you think that a bubble would be consensus? Everyone agrees it's a bubble, and then but because there seems to be.
Having lived through 1999 and 2000, I know that's not the case.
Well, I think to get to that point, there are going to be pockets of unproductive spend, right? That's the definition of a bubble. That's certainly going to happen with the amount of capital that we've seen thrown at this, and you've heard CEOs of these hyperscaler companies say that in so much as that they think the risk of being behind is just so much bigger.
Exactly what Zuckerberg said. That's right. He said, we could misspend a couple of $100 billion, and that would be bad. But the bigger risk is that we don't spend enough.
And that's why you have everybody piling behind it. We were just talking about this earlier, this idea you have people building data centers, energy resources without people to even back it. And at the same time, these companies get business models that are increasingly complicated as they all invest and have revenue in each other. How hard is it to invest in this place in the market, which is increasingly making up the entire market, and be a generalist and not fully understand all of that? Does everyone need to be an AI expert in order to invest in this equity market right now?
I mean, to a certain extent, and you need to know how it works, right? And I think that's something you have to use it, you have to understand it, you have to understand how your business is going to use it, and really think about different use cases across that. But I think what's interesting, the biggest bottleneck right now is energy, right? That's the problem with this. It's building that out, but this grid problem that we've had in this country, right? An aging grid that was, exposed to power outages, that was happening before AI, right? So if we get this investment in the grid where we get this upgrade, that's not lost because if AI ends up being a bubble down the road, right? We needed that anyway. This is getting kind of momentum behind it from a regulatory standpoint that I think is important and good and won't be a bubble down the line in terms of that build out.
So your base case, we're there. For the mid-2026, your base case is 66.50 to 67.50.
Yes.
Does that mean you lean towards the bull case? Because since we've already achieved that, we'd have to stagnate to stay at your base until June of next
Well,
year.
and look, we've been operating in an environment that's like very low volatility. That's not something that we expect going forward, right? Like this is going to be a choppy, particularly as we go into the end of the year, where we have this kind of really tenuous relationship where the labor market seems to be weakening and inflation seems to be moving higher. Like I think that's going to create some volatility within the market. Ultimately, we think we avoid a recession. But to your question, we've been increasingly talking about our bull case. We'll get a lot of information through Q earnings, but what gets us to that 72.50 of our bull case is, a combination of better earnings growth. We're below the street in terms of 2026 earnings growth, so maybe coming up to where the street is, and then also a higher valuation, which I think is one of the things that's like a little bit eye-popping in terms of thinking about staying at a 22 multiple in the current environment.
There are lots of parts of this market that are rallying, though. I saw this statistic from Bespoke that really surprised me, that micro caps over the past 6 months have rallied 20 percentage points more than the S&P 500, and the last time that happened was out of the 2020 nadir into 2021. If you look at that, is it a re-acceleration of the economy trade or is it a speculation trade?
I think it's probably a little bit of both. I think it's, if you break that down, I'm sure what's driving that is probably microcap tech names or those tied to quantum computing or something like that. But there's an element of, okay, when you look at when those started to rally, it was August, right? So preemptively in front of what the Fed was going to be doing. And just because you're not seeing the 10-year move materially down doesn't mean that you're not seeing financial conditions ease, right? Which is the key component when you're thinking about, okay, what could get growth to reaccelerate and what has been holding back, other parts of the market on the small cap side who are, much more floating rate debt exposed, which, has much bigger ramifications from an interest rate perspective. So the fact that we have financial conditions coming down because we have high yield spreads where they are and we have the equity market where it is, that is a positive feed through into growth. And that I think is a net positive for those smaller cap companies as well.
Abby, we're going to have to leave it there. Thank you so much. It's been fantastic. Enjoy the rest of your Friday. That is Abby Yoder of JP Morgan Private Bank. Let's get a check on a stock market that's going a whole lot of nowhere right now. We are up 1/3%. That's better than we were in the futures trade when it was literally flat. It's a pretty even split between what is moving it and what is not moving it. It's tech on both sides of the column. Apple, Alphabet, JP Morgan, so the big cap tech stocks are the things that are helping us, along with banks. Matt mentioned we're going to get the banks kicking off reporting season starting next Tuesday. On the other side, it is Amazon, Meta, AMD also falls by 1% this morning. United Health also down nearly 1%. If you look at the sectors, how they perform this week, you get a very AI flavor to things. Because if you look at utilities, yes, that's at the top of the pile. That's not a safety trade, though. It's so many energy stocks and power providers. Abby Yoder was just talking about this. The desire and the picture that still needs to be figured out for this AI boom is how we power the things. Infotech, that follows close behind. Again, maybe the same story. On the bottom of the pile, you have real estate, energy, materials, industrials, so kind of a more cyclical type flavor to the things that have been falling. But overall, we are on track for another week of a gain, up 0.6%, Matt.
All right, so watching a market climbing, I was going to say towards the close, but we still have, so a lot of time, 6 hours.
The weekend's not here yet, I regret
It'll
to
happen
say.
eventually. Coming up, U.S. earnings season kicks into high gear next week when Wall Street banks release earnings. We'll take a look at that next in depth. This is Bloomberg Open Interest.
At what point do you say, we made a mistake and we're getting out? How long do you give it before you say, this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And yet on the other hand, if you're stubborn and you refuse to admit I'm wrong, if you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersetchi in Vienna, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
A check on equity markets this morning. We're higher by 0.5% for the Russell 2000 index. That leads the way up 0.33%. We're at the highs of the morning compared to where we were for futures markets. Maybe it's because Governor Waller said that the labor market is a concern to him and we could be seeing negative payrolls growth. Next, it is your top calls of the morning. Some of the analyst action that we're focusing on. First up, Morgan Stanley upgrading communications equipment company Ciena, saying that concerns around the margins are overdone. Even so, shares falling 0.6%. Comerica, that gets a downgrade from KBW and sets its price target to $93 after its deal with Fifth Third. The analysts say that the deal is positive for both banks, but downgrade brings Comerica's rating in line with Fifth Third. Those shares, though, are up 0.4%. Finally, Venture Global, that gets downgraded at Mizuho after an arbitration ruling involving BP. That decision finding that Venture Global failed to declare commercial operations at one of its facilities on time. A negative surprise, according to the analysts. Those shares getting crushed this morning, down 18.3%, Matt.
Absolutely crushed.
Crushed.
All right, let's talk about the far larger companies that are reporting, and most important really to us, the biggest banks in the U.S. Are going to come out with earnings next week. J.P. Morgan, Goldman Sachs, Wells Fargo, and Citi all kick off earnings on a banner Tuesday, followed by Bank America and Morgan Stanley on Wednesday. For What to Watch, Bloomberg finance reporter Catherine Doherty joins us now. And, Cato, this is going to be a big one, right? Because M&A is like back in a huge way.
We're seeing signs of a resurgence. That's right. It was the busiest quarter for initial public offerings that we've seen in years since 2021. So what does that mean for the banks? It is likely that we're going to hear a lot of enthusiasm, not just for the quarter, but for the remainder of the year and potentially for the year ahead. A lot of the banks will come and talk about their both advisory and equity underwriting. Equity underwriting tied to this resurgence of the IPO market is likely to lift the bottom line for the biggest banks. As you said, we'll hear from JP Morgan and Goldman Sachs on Tuesday. We have Bank of America and Morgan Stanley the following day. Jefferies has already reported. They're the first to come out, and they've given some signs that, at least for them, they had their best third quarter on record. It remains to be seen whether or not the other U.S. banks are going to report some of their own record highs. But if the deal pipeline that is any indication, it's likely that this momentum is not just a sign for this quarter, but what's to come.
What about retail activities from these banks, Catherine? Everybody will be listening to Jamie Dimon, I'm sure, about what weather event he describes this economy as. But what are expectations for those areas of JP Morgan, Bank of America, Wells Fargo, the very retail exposed ones?
That's right. So listening to Jamie Dimon, Brian Moynihan on Tuesday and Wednesday, there's likely to be commentary about U.S. spending. There's always the consumer check-in where they will be comparing not just year over year, but quarter over quarter to see whether or not spending has slowed down. If there's any indication, also delinquencies within credit card rates, that's another sign that we'll be listening out for. But so far in the year, all that we've been hearing whenever analysts are asking these types of questions to executives on big conference calls, there really hasn't been any signs so far of any cracks or any sort of concerns that have emerged. That being said, if there's starting to be signs, that will be something that I am sure analysts will be emphasizing, not to mention the fact that with all of the BPI reports and that being delayed, there's now these signs coming from the U.S. banks that not just the bank analysts, but analysts at large will be looking and diving through the own reports from the banks to really get a checkpoint on how the U.S. consumer and businesses are doing.
Catherine, what about the bankers themselves? We've only got about 30 seconds here, but are they still desperately needed? Are they still getting paid? You know, is there still a talent war, or is AI coming in and doing more of the work?
I think what we've heard from so far is that the AI is helping with their work, but it's not replacing these bankers per se. Jamie Dimon is coming forward and saying that for his own cohort, they're able to work faster, and all of the money that they're putting into AI, that they're actually seeing a return that almost equals or cuts out what they're putting in. So if we hear from more of the banks around that front, there's going to be a lot of pressure for them to really show and not just tell how AI is transforming their business and helping their bankers at large.
Gotta say, Catherine, it feels like that pressure is literally everywhere, whether it be banks or Levi's or some pharma company. Catherine, thank you so much. Looking forward to your reporting next week when you get those earnings, Catherine Doherty. Coming up on Open Interest, how an AMD ETF wipeout could spell trouble for other leveraged single stock funds. ETF Friday, that's coming up next.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing
bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what's going on in stocks at this moment. The S&P 500 had appreciated up a third of 1%. Now it's up 0.2%. NASDAQ as well. So we're seeing some gains here. If you take a look at the biggest tech stocks, you can see a little bit of a split, right? Apple is a gainer. Actually, Apple and NVIDIA are both gainers right now, but you've got Meta down just a little bit today, AMD down after a stellar run, Qualcomm down after that Chinese investigation, and Stellantis, even after a positive sales outlook, down 1%. It's a difficult job for Antonio Filosa over there to try and right the ship, Danny.
Yeah, that's painful. Even that 13% sales increase. Yeah. Point taken, Matt. Elsewhere, speaking of some pain in this market, Granite Shares was forced to shutter a 3-time short AMD exchange-traded product after shares of AMD surged and wiped out its entirety of value. The product aimed to offer 3 times the inverse return of the chipmaker, so you can imagine just how painful it would be. Joining us now is Athanasios Saravegas of Bloomberg Intelligence. Athanasios, it always blows my mind that these products exist, that a retail investor can invest in something that can literally blow up and go to zero. What does this saga tell us about what else is out there in the ETF market that risks a similar fate?
Yeah, well, I think first what it tells us is people feel so good about the market, right? That you have these blow-ups and it kind of doesn't really, measures don't skip a beat. But it definitely comes at an interesting time because you had mentioned these exist in Europe, but they don't exist here. But issuers are trying. Just last week, they filed for 3x versions of all these different stocks, and you had this blow up. So I think it's just a reminder that this risk of a blow up is actually a real possibility for some of these stocks. And if you see what they're trying to put in these ETFs, it's not just AMD, right? And AMD is a pretty large cap company. They're putting small cap quantum stocks. They're putting meme stocks. So they're really sort of stuffing these really volatile names in these leveraged ETFs. So I wouldn't be surprised if we see more in Europe, or even, if these 3X are approved here, the possibility could also happen here.
I mean, if you put everything on Black 22, you got to expect that you could lose it all. Gambling, what we consider traditional gambling is more and more allowed. It feels like almost encouraged by regulators in the U.S. Can't we expect the same of the markets? Like, is there any question that we're going to be allowed to invest in riskier and riskier products?
Oh, I think there's no doubt. Look, NYSE just bought some shares in Polymarket, right? They bought a portion. So I think that there is this encouragement of wanting to gamble more. And if you just look at how ETF launches have changed over the year, like all of it is encouraging trading. Like a third of all the launches this year use leverage. A quarter of them are single stock ETFs. So it's really almost come full circle. It's all about, let's buy ETFs for diversified exposure. Now it's for single stock leverage. So I think also it's just conducive with the market. The market keeps going up. These sort of bets on these speculative stocks are paying off. So the issuers are really just leaning into it and launching more and more of these products, upping the leverage. So yeah, I think this gambling phenomenon is going to keep continuing.
All right. Athanasios, really appreciate your time. Athanasios Saravegas there of Bloomberg Intelligence. He makes up a triumvirate.
Oh, great word.
Of ETF reporters that we rely on, along with James Seyffert and Eric Balchunas.
Yes, of course. Who, by the way, was pointing out, Eric Balchunas, the huge amount of flow into gold. Superlatives abound. It's so popular right now.
Yeah, and we're going to talk about gold later on in the program. We have someone very important from the industry that tells what he thinks about the $4,000 target. We're also going to talk to Joanne Shu of the University of Michigan. Consumer sentiment data coming out, as well as James Lindsay of the Council on Foreign Relations. This is Bloomberg.
cidade estava sitiada.
Isso, ao começo, eu temia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Israeli troops have begun leaving parts of Gaza. Palestinians march northward as the first phase of President Trump's peace plan takes effect and a ceasefire begins. The BBC's Hugo Bechega from East Jerusalem.
The Israeli military has pulled back to lines agreed under the deal, although IDF troops still occupy over half of Gaza. The countdown has now begun for the release of the remaining hostages, including the 20 believed to be alive, in return for hundreds of Palestinians in Israeli jails.
Swap expected to begin Monday after President Trump attends the signing of the peace agreement in Egypt and addresses Israel's parliament in Jerusalem. The White House blaming peace over politics after the president was snubbed for this year's Nobel Peace Prize. It was awarded to Venezuelan opposition leader Maria Corina Machado, who is in hiding.
I'm honored, humbled, and very grateful on behalf of the Venezuelan people.
CBS's Vicki Barker.
The committee praising Machado for uniting the opposition around shared democratic values.
At a time when democracy is under threat, it is more important than ever to defend this common ground.
A setback for the president in his bid to have National Guard troops patrol Democratic cities to protect ICE agents and facilities. A federal judge in Illinois has temporarily blocked them from deploying anywhere in the state. Correspondent Ian Lee from Chicago.
The decision came after soldiers, including roughly 200 Texas Guard members, had already arrived in the area and were seen patrolling the federal ICE facility in the suburb of Broadview. In response, Illinois Governor J.B. Pritzker wrote in a social media post, Donald Trump is not a king, and his administration is not above the law.
The 10-day-old government shutdown could prove problematic for travelers and for some federal workers this Columbus Day weekend. CBS's Chris Van Cleve from LAX.
Transportation Secretary Sean Duffy raised some eyebrows when he said air traffic controllers found to be taking advantage of the FAA's sick leave policy could find themselves in trouble. In fact, they could find themselves out of a job.
They won't get paid until the shutdown's over. Officials in New York have busted up a scheme that sold permits to wannabe commercial truck drivers. CBS's Michael Wallace.
Prosecutors say drivers would pay up to $3,000 to have Jamie Middleton of Queens take the required written test for them. She would allegedly wear disguises, even mustaches, as she took the test for at least 10 people. One of her customers was hired as a garbage truck driver on Long Island. In all, 7 people, including DMV employees, have been arrested.
Dow up 153. This is CBS News. Muhammad Ali's 1967 draft card goes up for auction today.
His name is called twice at the Armed Forces Examining Center in Houston, but the reigning heavyweight champion of the world refuses to step forward. After he left the federal building, he told reporters why he refused.
That I've said it once and I will say it again. The real enemies of my people are right here, not in Vietnam.
Christie's auction house says the draft card was almost certainly in Ali's wallet that day. Christopher Cruz, CBS News.
A first at the Sphere in Las Vegas. Gwen Stefani will become the first female headliner at the venue when she reunites with No Doubt for 6 shows next May. Pre-sale tickets begin next Wednesday. All tickets follow October 17th. The Sphere opened 2 years ago. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Catch us on YouTube. We're streaming there. Go to youtube.com and search Bloomberg Live Radio, and that's where you will find us. It is Scarlett Fu and Paul Sweeney with you for the Bloomberg Intelligence program for the next 2 hours. Coming up, we're going to check in with Joanne Shu, University of Michigan. They came out with their surveys today, a little bit better than expected, so we'll get the data there. Jay Polovsky, he's the Chief Investment Officer, co-founder, TPW Investment. Get his thoughts on these markets. And then Anurag Rana, Bloomberg Intelligence Technology Analyst. Microsoft is out there saying they're not going to have enough data center stuff for all their AI clients until like sometime next year. So they're pushing that out. So it's just another data point that this AI spending continues to go unabated, that's for sure. Sri Natarajan, Bloomberg News Chief Wall Street Correspondent. He's going to join us here. He's going to get a little preview of some bank earnings, which kick off in earnest next week for the big New York City Money Center Bank. So we'll have all that coming up over the next couple hours. Let's kick things off like we do on this Friday with John Tucker and a Bloomberg Business.
All right, we'll start there with you, Mish. We are data dependent, so let's get right to it.
주문
The
청산이
sentiment index, this is the
완료되었습니다.
headline number coming in at 55. Better than expectations, a little lighter than the previous reading that we had. As far as the inflation expectations, I'll do 1 year. That's 4.6%. A little better than the expectations of 4.7%. A little better than the previous month. As a result, let's go right to the policy-sensitive 2-year yield. 2 basis points lower, 357 to 10, down 4 at 4.09%. The major stock averages pushing higher on the final trading day of the week. Real quick, Levi Strauss, after their earnings report, down close to 10%. Leaders at AI computing company CoreWeave, they sold shares worth more than $1 billion after the lockup on the stock. CoreWeave shares up right now 5%. Paul Christopher at Wells Fargo, he remains bullish of stocks, even if he's a little worried about just how expensive they are.
You know, you have to sort of focus here on what I'd call the big rocks. The big rocks are that artificial intelligence is a trend. It has some momentum behind it. It's investable, and we need to take advantage of it.
Yeah, right now the Dow up 171 points, S&P 500, hovering around the record, 17 points higher right now. That's up 0.25%, 67.52. The Nasdaq 100, 64 points higher. That is up 0.5%. The Trump administration recalling a group of federal workers it now realizes it really can't do without. Workers at the
air traffic controllers?
Well, they're on the job. They're just not getting paid. These
That's
are the
so much better.
People who are off the job. But the Bureau of Labor Statistics, those number crunchers, because we have inflation data that they have to get out. The reason they have to get out, and the administration cares about that, is because the CPI, we base the cost of living adjustments for Social Security payments next year.
That's a big
and
group of
I would
constituents.
guess the last group of people you want to get angry are seniors collecting Social Security
Who
do
go
vote.
to the vote? Yep.
Yes, so
go to the
that's
voting
that. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and I don't know who to touch back to.
We're not sure either.
I can tell you're pointing back and forth. No,
All
you
right.
take it.
John Tucker, thank you so much. We'll check in with you a little bit later on. Scarlett Fu and Paul Sweeney here, and we want to bring in Bloomberg News' Bailey Lipschultz, who is taking a look at some stocks on the move today. Bailey, get us started on Qualcomm.
Yeah, Qualcomm shares ticker QCOM down about 1.5%, and this comes after reports that Chinese regulators will investigate the company's acquisition of Israeli company Autotalks. So this comes with the China State Administration of Market Regulation saying that the company violated the country's anti-monopoly law regarding those talks, not disclosing enough information. It seems like from some of these reports, this could be part of a bargaining chip or looking for leverage between President Xi and President Trump. We've seen a lot of going back and forth around chips and ships and tariffs. So it does seem like this could be a part of it. So not a big move. It was down a bit more in pre-market, but still not a positive to be a company like Qualcomm and be somehow dragged into the back and forth between the leaders of both China and the U.S.
Let's talk about Mosaic. What is Mosaic and what's going on there?
So Mosaic is an agricultural chemicals company.
Nice.
Ticker MOS down more than 7%. So this, when you're looking at size and scope, worst day since early August, trading at the lowest level, at least on an intraday basis, since early May. This comes after the fertilizer company said third quarter phosphate production fell below what management expected. They cited some mechanical issues at one plant, utility interruptions at another. The thing that stands out from the Wall Street reaction, Scotiabank analysts saying that the stock will underperform in their downgrade to sector perform. But guys, credibility questions will resurface again. It's never good to have analysts who are on the sell side, who are supposed to be promoting stocks, coming out saying you have to question the credibility of management and what they're actually doing.
Yeah, questioning credibility are not words that you want linked to your stock ticker. All right, let's talk about Levi's, which did report earnings yesterday.
Yeah, reported earnings that were pretty solid, raising their full year outlook. But the big thing, the topic of this earnings season in particular as it relates to retail companies, tariffs. So they did warn that tariffs are going to impact companies or impact their operations. The thing that stood out to me was they're saying that they still expect tariffs of 30% in China, but they bumped up their expectations to 20% for the rest of the world. Just a quarter ago, they had that at 10%. So doubling that. Shares of Levi, ticker LEVI, down more than 10%. Worst day since early April when tariffs were unveiled. We saw Helen of Troy, the company that makes OXO goods, Hydro Flasks, saying that tariffs are starting to bubble up and be a concern for their supply chain and kind of how they're going to be pricing goods. Now we're seeing it show up in Levi Strauss, and it's going to be very interesting to see how this plays out because, again, this is a topic for the holiday season, but really going into 2026, a lot of these companies ramped up bringing their goods into stores and into the U.S. ahead of time. So Levi already has 70% of their products they need for the holiday season on hand. What does it mean for 2026? That's where these questions pop up.
All right, Billy, good stuff. I am in Levi's. That is my gene.
Yeah?
Are you?
501?
Yeah.
I only wear chinos. I'm not a jeans guy.
Oh, man.
Well, Levi's makes chinos, or they once did, right? Levi's makes chinos, or they used to make Dockers, but I think they sold them, right?
I don't know.
John,
what do you do?
And I'll remind everybody that the remnants from denim production by Levi's is used for
You told me this.
Insulation.
the U.S. currency.
Really?
Yeah, hold up a bill. It's got little remnants of denim in it,
Oh,
the little
interesting.
fibers.
If anybody has cash in this room,
You guys, I
주문
say that
청산이
every time we do
완료되었습니다.
Levi earnings.
Yeah,
You guys forget that every time.
How does inflation impact, though, the production of the U.S. dollars is my
Exactly right.
Good question. That's your assignment for this weekend.
All right, Bailey, thanks so much. We appreciate that. We had some economic data here today. Our good friends at the University of Michigan out with their data. And, oh, by the way, the University of Michigan football team plays at USC tomorrow night, 7:30, so check that out. But they also have some economists there. One of them is Joanne Shu, Surveys of Consumers Director at the University of Michigan. Joanne, the numbers came in a little bit better than expected. Tell us what some of the headlines are for you.
Essentially, consumers don't really perceive any material changes in the economic outlook between last month and this month. These are relatively low readings. Consumers broadly don't feel very confident about the economy, but they don't feel that differently relative to last month. They're still most concerned about pocketbook issues, such as the burden of high prices and inflation, as well as concerns about a weakening in the labor market. And overall, they don't see things as materially different than September.
What about their outlook when it comes to inflation?
Inflation expectations ticked down just a touch for short-run expectations from 4.7 to 4.6, and long-run expectations held steady. And both of these numbers are about midway between what we were seeing about a year ago and the spike in inflation expectations that we saw in April and May when the tariff rhetoric really reached a peak.
So, Joanne, I'm just looking at the University of Michigan sentiment. The headline number came in at 55. Where would you like to see it? What would be an indicator of a solid economy?
What we want to see is several months of sustained increases. We don't want to be bouncing around at this 50, 60 level. These are not optimistic numbers. We want to see some sustained increases in an upward trajectory. That would be really important. I think it's, given that consumers are very loud and clear, they're worried about inflation, they're worried about high prices, they're worried about the trajectory of their incomes going forward, that they don't really see any relief coming imminently on those dimensions.
Given that we have this government shutdown and we don't have official data to work with, certainly on the labor market front, although John did tell us that the guys over at the BLS are going to be coming in and working on the CPI report, which will probably be delayed until later in the month. What kind of feedback, or what kind of questions, I should say, have you gotten from folks in the market about the UMich data? Because this is a solid data point that they can trade on in the absence of official data.
Well, the number one question I got over the last 2 weeks was, are you going to release on time today? And we did. We're unaffected by anything happening at the